Now here is Ticky Fullerton on Your Money.
Hello, I'm Ticky Fullerton. Every night bringing you a full hour of the very best in business coverage across the nation and internationally, especially where business and politics meet. Well, coming up, Prime Minister Scott Morrison's manifesto ahead of the election goes big on border security. We'll get the latest with Sky News reporter Annalise Nielsen. Power to the people in South Australia. Australian-based British industrialist Sanjeev Gupta joins us to talk about why he's sponsoring Port Adelaide and giving us a half-yearly update on Whyalla and his proposed float of the building materials business later in the year. And Bendigo and Adelaide chief Marnie Baker tells us Kenneth Hayne didn't go nearly far enough to sort out a level playing field with the big banks, and she talks through her half-yearly results with Leo Shanahan. Well, look, a word about those devastating floods up north. I spoke to AACO Chief Executive Hugh Killen this morning on the phone. Honestly, I could hear the shock in his voice as he described this inland tsunami that hit graziers and, of course, thousands of cattle on some of the huge beef properties up around the Gulf this week. He's just back from several days out northwest getting to grips with all that devastation. So, on Tuesday, Hugh Killen was in Bangkok look, you can see some of the pictures here, but he was in Bangkok at a dinner hosted by the Crown Princess of Thailand. Almost 300 people raised a couple of $1 million for needy children. AACO beef was the pièce de résistance on the menu. Strong green shoots in his strategy to move the company to high-branded export business. That day, he also realised that the normal northern flood was going to be anything but normal. On Tuesday, Anna Spears, the Chief Operating Officer, was on the ground to see for herself, and by Thursday, Hugh Killen was up in Cloncurry. Now, flying up over the wet is like an ocean, apparently. It takes a day to fly it in a chopper through to the Gulf. But in this water, of course, huge numbers of floating cattle that simply can't or couldn't find dry land. There are stories of choppers trying to winch out a few cattle free from the mud, but overwhelmed by the misery of the sheer numbers. Here's a map of the area, and you can see it's absolutely brutal. Before opening this morning, AACO informed the market that on its current breeding herd, cows and their calves at Wandoola, it's right in the middle of that blue, is now just a sea of blue there. About 30,000 head to sustain, quote, extreme losses, unquote. Cannabee, Dalganally and Karum, a herd of about 50,000 are set to sustain, quote, lower but still material losses. Now, Hugh Killen said he really tried to be considered on the numbers and indeed the words used. Remember, it's a public company. Wild numbers of hundreds of thousands of head of cattle dead have been thrown around. Some of those are very hyped. I mean, it will be many thousands. AACO opened the day down over 11.5%, with the ASX release stating, actually that's where it finished, the ASX release stating that its fiscal 19 full-year earnings will be materially affected. Most herds were, of course, weak from the drought, but one industry fellow I spoke to today described the desperate story of one grazer who had bullocks primed and ready for sale, which he was trying to walk out over black soil, that black soil up there where they were bogged, as a shocking death. It was the graziers and animal welfare that were front of mind for Mr. Killen in this tight-knit community. He told me, we've been humbled and inspired by the support we've had. People feeding AACO cattle on the edge of the road down around Julia Creek. He's now looking to support the community where he can and the company can. No lives have been lost, but livelihoods have been smashed. You know, cattle have been known to swim 20 kilometres in water, so many end up on neighbouring properties. That's what happened in 2010. And when the water recedes, there's an awful lot of confusion on the numbers. And that all continues until the branded cattle are all accounted for. It's a bit like a prisoner exchange, apparently. Right now, though, it's about fuel, and much of that is waterlogged in Townsville, and also avgas for the choppers who can drop bales on the turkeys' nests and higher ground for those cattle that have actually made it. It's a very long road ahead. In some areas, the water may yet be peaking, you know, in days to come this week, and including in some AACO country. And the wet season, don't forget, runs for another 2 months. Well, let's head to Canberra now. Labor MPs gathered at a meeting today to decide whether to support the controversial Medivac bill, which would give doctors greater powers to transfer refugees offshore to Australia. Bill Shorten earlier received a security briefing on the proposed changes, with Labor under pressure to abandon their support amid official advice that suggests up to 1,000 refugees could arrive in Australia. Meanwhile, Prime Minister Scott Morrison spoke at the National Press Club earlier today to reiterate that his government would rather lose a historic vote on the floor of Parliament on border security than any compromise over the bill. Well, for more, Sky News political reporter Annalise Nielsen joins me live from Canberra. And Annalise, look, here's another election, another border war.
Absolutely, and this is something that the government has been keen to talk about, because we do know they feel like it's quite a strong area for them. Scott Morrison was the immigration minister when the turning back the boats policy was implemented, and so he has been quite keen to spruik his record on that. And it does seem like he is taking a stand on this, as you say, that he said he would rather lose the vote than make some kind of deal with Labor. And we think that's because they've internally looked at it and realised there is a good risk that they will lose a vote on the floor, and maybe it wouldn't be the worst thing. They can turn it around into a political win, show like they have some values that they're sticking by, and see if the public feels like that's a good thing, see whether it resonates and they feel like that is the right thing to do. Labor is pushing for these amendments to the bill. It's actually the Storer amendments. There's been a lot of confusion, because we do know Independent Karen Phelps put her own private members bill about these medical evacuations. But what we're arguing about this week is this legislation that's in the upper house, and these amendments that have been put forward and supported by Labor. They don't go quite as far as the crossbench would like, and so it's not a guarantee that they'll have their support either.
Right, OK. So when are we going to know how Labor is going to work? Because the interesting thing is where Labor ends up on this, isn't it? I mean, this is about being able to get some ministerial decision-making into this, but then potentially being referred on to a board. Isn't that right?
Oh, absolutely. It's definitely not a done deal on either side. We do understand that the Labor leaders had a briefing today with top security officials about these implications, that the government has said that there could be issues with allowing people guilty of serious crimes to be brought to Australia for medical treatment. That in the past we've seen that people who have come out on those agreements tend to stay in Australia, and so that's a big concern for the government. Labor's been very keen to say that they're not leaking anything from this private briefing that happened this morning. That's a bit of a pot shot at this leak last week about ASIO advice about whether it would impact border security. The government was talking about that last week, saying that their advice is that it would, but Labor was quite critical, saying that that advice should never have been made public at all. There's a Labor caucus tonight, and that's when it's likely to be discussed. We've already heard some dissent is likely in that meeting. Terry Butler speaking just a short time ago, saying that it would be a huge loss if Labor backed down on this. It wouldn't be palatable with the general public, and so this is likely to play out right through these two sitting weeks of Parliament.
Wow, OK. And look, in other news, we've had the Prime Minister and Chris Bowen, Shadow Treasurer, talking about getting these Hayne recommendations going.
Absolutely. We've seen the Labor Party's keen to make as much political capital on this as possible. They were the ones who came out and said they'd need a very good reason not to implement any of the recommendations, and they've been pushing for extra sitting weeks, and so they can push through some more of this legislation. The government's been quite critical of that, saying that it's not something that needs to be rushed, but Christopher Pyne was also quoted saying that, yes, it could mean that some of these changes recommended by the Commissioner wouldn't come in for even up to 6 months, because they would need the sitting time, but they don't want to rush the reforms either. And so it's turning into a bit of a political football game. It's something that the government probably doesn't want to be dominating the election campaign, which at this rate looks likely to be held at the end of May. And so we will probably see some of the more high-profile reforms going through. But so far we've heard a lot of argy-bargy about these mortgage broker reforms in particular. The government saying that they don't want to be putting anyone out of business, and so they want to take their time looking at it properly. It's something that the opposition really is quite critical of.
All right. Well, excellent. OK. Well, we'll keep in with you because there's going to be big changes over these next 2 weeks, and presumably that's the last 2 weeks in Parliament. Is that right? Before the election?
Yep, so far all the government said is that they're focusing on this budget, and so this is our understanding, but you never know. Things can change in a heartbeat here.
They can indeed. Annalise Nielsen, thanks for all of that. Now, Sanjeev Gupta, Executive Chairman of the GFG Alliance, swung by today to discuss the half-year outlook for his very big company and complicated company. We canvassed everything from Whyalla to his recent 5-year sponsorship deal with Port Adelaide AFL Club. For more, I sat down with the billionaire industrialist a little earlier. Sanjeev Gupta, thank you so much for coming in. Now, your half-year results, how'd you go?
Well ahead of expectations. So market's been very favourable. So it's not just our brilliant performance. Market's also been helping.
All right. Everybody, of course, focuses on Whyalla, on the steel. Now, how is that going?
So we have two businesses in Australia, right? Yes. We have what we call our building products business, which is our scrap recycling, electric arc furnaces, and all the building products which go into construction. So that's the business, what used to be called the good business, let's say. So that's obviously doing incredibly well.
Okay.
But the business which people forget is our primary steel business, which is Whyalla.
Yes.
And the mining works. So the iron ore and the coal mining works.
Yeah.
That combined business is also doing incredibly well. We're actually, we're expecting our year to end at something like $300 million EBITDA, which is an incredible story.
$300 million cash flow, really?
$300 million EBITDA.
EBITDA, yes. Right, OK. So within that, there's, I read that Whyalla itself is ahead of schedule in turning around. In
terms of turnaround, Whyalla Steel Works still lose money. That's no surprise.
Yes.
When we bought the business, it was losing a lot of money.
That was 2017.
Yes. And now we're well ahead of our planned turnaround for that business, and we expect by the end of this year, i.e. by June, we expect to actually be breaking even on the steelworks.
Yes.
But what accompanies that business is the iron ore business, which is doing incredibly well. We completed our beneficiation plants. We opened 2 new mines on the iron ore side. We, of course, acquired Tamor mine, which is doing amazingly well. We're starting our new project there for another mine there. So the mining business, both iron ore and coking coal, are doing incredibly well.
Yes.
Steel business still a drag, but much smaller drag than it used to be. Overall, that business still tracking to make $300 million. OK, and going forward, you're confident about markets that you're supplying, that will, once you turn around Whyalla, that will really deliver upside going forward? There's 2 steps to the turnaround, right? One is to optimise what we have to the best we can with it, which includes being flexible. So, for example, at the moment, with the problems in Brazil on the iron ore with Vale, markets shot up. So we now are focusing very much on exporting pellets. So we're maximising exports of pellets. That means turning down the furnace a little bit. So that flex model is yielding great results.
This is your flex furnace model. You can turn down, turn up as when you...
Exactly. Yeah. So this is unique to GFG. Most steel producers just, go along producing as at the maximum speed they can, but we don't believe in volume, we believe in value. So that model is yielding results. The fact that we've turned up our capacity at the rolling mill now, making rail and sections, is 20% up.
Yep.
There is export of slabs. All these different flexes have allowed us to reduce the losses in the steel business dramatically.
But you're optimistic over the next 2-3 years?
The second stage, which is a big step, right, which is the big announcements we did in December, which is a big investment, $600 million already announced, another $600-700 million to follow. So that $1.3-1.4 billion of what we call the transformation project, that will bring the step change. That will make that business highly profitable. Absolutely, 100%. I just had a report before, a conference before coming here. We're tracking that. We're supposed to break ground on parts of it within the next few months, and that's a 2-3 year journey. But at the end of that journey, that business then becomes highly profitable and sustainable for the long term. OK,
Sanjeev, now you caused a bit of ire with Kate Carnell, the small business ombudsman. She says it's fantastic you guys have stepped in to deliver a huge economic boost at Whyalla, but it was absolutely essential they don't do that off the back of paying small businesses slowly. I mean, there were some reports that some small businesses maybe took 120 days to get paid. Why was that so difficult?
Look, first of all, what must absolutely be stated is that what we have done is we bought a business with existing payment conditions, right? These payment conditions were previous RM conditions, previous conditions under the administration of the business, which basically mean you get paid in about 3 months' time, roughly speaking, give or take.
Yeah. Even that's horrendously long compared to what the government contracts are and what ordinary course is now, isn't it?
It's not horrendously long compared to the market, but the calling is that for small businesses, large businesses should support small businesses and give them shorter terms, right?
Yes.
So, but we have actually initiated a special program, which is called the Supply Credit Finance Program, which will allow small businesses actually to be paid instantly.
So Lex Greensill is onto this, and
yes.
you know,
that's what they do. That's what their main product is the supply chain finance.
So how soon could it be pulled down, and to what can small businesses expect?
Well, I mean, once this program is in place, you can be paid immediately.
Yeah.
Obviously, you bear the finance cost of that, but if you're competitive,
yes,
if you have a competitive offering in every other respects, but you can't finance your business yourself, then this program will allow you to finance it through that program. Normal businesses, larger businesses will just finance it using their own credit lines.
But in terms of suppliers, if I'm small businesses supplying you, they'll be able to get payback within...
Instantly, almost, right? Okay. They can get paid instantly, and Lex or Greensill's business then provides the credit to the... It's called the supply chain finance. Yeah. They intermediate, they become, let's say, the banker for the small businesses.
Yes.
They pay the small business upfront, and they will give the credit to the business as if a large business was giving the credit. So when we buy from a large business, of course, we expect the full credit, and we get the full credit. It's tough on the small business, especially when the volumes are going up. Because obviously, the more the business grows, the more they have to put up.
Yes, and you're in high growth.
Yes.
Yeah. All right. Now, I've got a really major issue with you here, Sanjeev, and this is that you've decided that GFG is going to be on the Port Adelaide Power jersey this year. So presumably you're putting in about as much as Oak is. I mean, that's a big commitment over 5 years, isn't it? Two
things, first of all. First of all, very clearly, if you see the logo is very different to the corporate logo. It's my family's logo, not the corporate logo. It's a family sponsorship, not GFG
That's
Alliance.
Even worse, because I'm barrack for the Swans. This is just...
But let me...
And I've got family issues with now, you know, because half of them support Port, so this is going to be a real issue in my household. So, yes.
The second point, well, the related point to that is, the sponsorship of Port is basically my sponsorship or my commitment or my investment in community rather than in sport. Yes. Although sport is a medium to that. So is this
going to be a Liberty thing? What is this going to be?
It's my family. It's GFG, so which is a Gupta family group.
Yes.
So GFG is doing it. I'm doing it personally. I'm paying for it personally. Yes. And the idea is that sort of I have a dual track in my mindset in terms of how to build the business in places like Whyalla, which is invest in the industry but also invest in community. And this is one of the mediums to invest in community. There's lots of initiatives that Port have agreed to and AFL have agreed to. We're upgrading the stadium in Whyalla. Yeah. They're going to play a pre-season game there. The community camps are going there next week.
Well, you had the Premier back again over the weekend to sort of launch all this. Now, Port, of course, has this bond with Shanghai, goes up there. I think they're playing the Saints, aren't they, in June. Now, are you going to support that as well?
No, we automatically, as part of the sponsorship, we automatically will. And there are derivative benefits, I call them, like that. Like we have a lot of business with China. China's supplying some of the equipment in the projects which we're undertaking. So, of course, I'll try and get some benefits from that. But the primary purpose, the primary objective I have to support this is to support the community involvement it has. It wasn't an easy decision, I must tell you. It took, Koshi was after me for over a year to do it, and in the beginning I said it's not for us to do because we don't do corporate sponsorships, and in the end we didn't do a corporate sponsorship. I decided to do it personally, and I decided to do it because I believe that Port is a great community team and has great roots, great connections.
Well, it's got a bit of a way to go. I think it was number 10, wasn't it? I think.
Watch the space. Watch the space.
Okay, all right, go Travis. Okay, now, moving on. This float that we're hearing about, we've heard about the Australian float, which is part of the buildings business, right? And also I spoke to you last time about the US float. When is that likely to happen, and could they happen together? Because that's been talked about as well.
So there is limited amount I can actually talk about it because of different rules. But what I can say is that in general, the group is very committed to entering the capital markets this year, very quickly, both on the debt side and on the equity side. It's part of our initiative to make the group more and more transparent as it gets bigger and bigger. And we will we're definitely exploring several options and several quick steps into that.
All right. Internationally, of course, you took over Rio's Dunkirk aluminium smelter. That is going on. Monsieur Macron is very happy about this because this is part of his big role of trying to get investment into France.
No, absolutely. Actually, I was sitting opposite him at
in Versailles.
Yes, indeed. Yeah. Which was incredibly exciting. It's great to see his energy. So yes, absolutely. I mean, of course, when you talk about Dunkirk, what we've done at Dunkirk is turn it away from being a commodity business in the sense that we've hedged everything. We've hedged the alumina, the aluminium, the power. So everything is locked in. So
have you got any contracts coming out of that? New contracts?
The objective there is to build the downstream. So we've hedged out. We've locked in our margin for the next 3 years for the business, so it makes a significant amount of money, which is locked in because everything is hedged. So now, during this period, during this 3 year, we have to work out our downstream strategy, which is was the real motivation to buy this business.
You've got one car contract.
We already have one downstream business we bought, which is making wheels. make alloy wheels, which the Dunkirk facility supplies, and that wheel plant just won a new car contract.
Brexit, I see Nissan's not going to build their next car up in the north of England, but the CEO did actually say it was less to do with Brexit and more to do with other things like diesel. Brexit affecting you at the moment?
Well, it can't not affect you. It's very depressing right now where we are. But it's not far. We will get one way or another. We will have a final resolution soon, and that's what everybody wants. I think everybody I know just wants a final resolution, whichever way it falls. Just want to get on with things.
Finally, Sanjeev Gupta, can I ask? Financing things. You had the British media on your back earlier in the year. Are things getting easier?
Well, look. The businesses are growing, businesses are making money, all of them are churning out cash. So, of course, we're not complaining at all. But what is true is that the pace of the growth has been fast and continues to be, and some of the capital market initiatives will make it even more stable, and we're looking forward to those. Yeah, Sanjeev Gupta, great to talk as always. Thanks so much. Thank you. After the break, Bendigo and Adelaide Bank CEO Marnie Baker on the bank's half-yearly results.
You're watching Ticky on Your Money. Now, back to Ticky.
Welcome back. Well, Bendigo and Adelaide Bank reporting a near 2.5% drop in first-year half-cash profit to just shy of $220 million, hurt by a dent in margins because of higher funding costs, the usual story. On a statutory basis, net profit fell more than 12% to $203 million. Despite the dip, though, the regional lender hopes to benefit from the fallout the Royal Commission will cause for the big four banks. CEO Marnie Baker saying, "We know consumers are looking for an alternative, and as an organisation that puts the interests of customers first, we're well placed," adding the changes will have less of an impact on us compared to others in the industry. Well, investors are set to get an interim dividend of 35 cents a share. For more on those results, Your Money's chief business reporter Leo Shanahan spoke with the Bendigo and Adelaide Bank CEO Marnie Baker a short time ago.
Marnie Baker, thanks so much for joining us.
Pleasure, Leo.
Now, look, to your results in just a moment, but in your statement this morning to the ASX, you've said little in the Royal Commission goes to the issues of competition and a level playing field, something many other inquiries have said is essential. Do you, in short, don't think the Royal Commission has gone far enough?
No, I mean, Commissioner Hayne, in putting out his final report, has gone a long way to improving outcomes for customers. As you would expect, it really does focus more on the legal side and the regulatory side. I think it's left open scope for the government to sort of supplement that report and to do some more around ensuring that we've got a more even playing field.
All right, well, what would have you liked to see been in there then?
Some of the initiatives that I'd like the government to address in relation to things like the too big to fail that came about, at the end of the start of the GFC. Which in essence provided a funding cost advantage to the major banks. And if you look at that, the implied too big to fail that comes with that means that the major banks are actually operating at probably about a three-notch higher credit rating than non-majors are. So that's one aspect. The other, I think, is around risk weightings. And in its very simplistic form, an individual borrower to come into a major bank would get the major bank itself wouldn't have to apply as much capital to the risk on that loan. That same risk, that same borrower to come into a non-major or to a non-advanced accredited bank would have to apply more capital to that same risk.
Sure, but as you say, other reviews have made similar observations about the Australian banking system. Are you perhaps confusing the role of the Royal Commission here with competition reviews?
I think it's actually extending. I think it's extending the conversation. It is something that we've been advocating for some many years on. And whilst the Royal Commission, yes, the mandate may not have been as broad as that for Commissioner Hayne, I think it is absolutely a direct extension when it comes to bad and poor behaviours and misconduct. It can be directly linked to when you actually have too much market power.
Now, the Royal Commission has hurt one bank particularly badly in NAB. It's lost both its chairman and chief executive, Andrew Thorburn, last week. Were you surprised that Mr Thorburn and Mr Henry chose to step down?
No, I wasn't surprised because you know, they've made a decision, and whilst I'm not privy to all the details behind the decision that's been made and the deliberations within that organisation, you know, it appears at face value that the decision that they've made is in the best interest of that organisation and something that they believe they needed to do to ensure that trust could be regained.
So it's fair to say you think it was the right decision?
It's a decision that organisation had to make, and that was the decision it made.
Now, what about the actual recommendations of the Royal Commission? How will they impact your bank, mortgage brokers especially, but wealth management as well? Do you foresee any difficulty in implementing that, or how it could hurt your business?
No, as you know, they've been fairly extensive, the recommendations, and we're yet to fully understand the detail underneath them. But at first blush, we're not concerned with being able to implement any of those recommendations. Even the Royal Commission final report itself, we're very pleased to actually see the complementary way that our current models in relation to mortgage managers and community banks was highlighted.
Do you think ultimately your bank, Bendigo and Adelaide, will benefit from the Royal Commission in that trust deficit perhaps in the major four?
Well, first and foremost, I hope that consumers will benefit from the Royal Commission, because that was the purpose of it. In relation to our organisation, you know, we've had a strong purpose in our organisation for 160 years now. So acting in the best interest of customers and community expectations has always been at the centre of everything that we do. So, you know, we will continue to follow that, and should that mean that we'll actually pick up customers who perhaps are a little more disgruntled with the behaviours they've seen within their own organisations, well, that would be a great thing.
Okay, on to today's profit. Your cash profit of $219.8 million is down 2.4%. You've blamed higher funding costs for those. What are those higher funding costs?
Higher funding costs is more, we were referring to wholesale funding cost that we have seen sort of increase. We saw it in the last half, we're seeing it in this half as well.
Do you foresee another lift in variable interest rates?
Well, time will tell with that. As you know, we do try to manage those things, and we do take the time to watch what's occurring in the market. But if it does become a more sustainable change, then we'll need to have a look at what we do around pricing.
And what other costs are squeezing those margins? Because you're not alone there in banking at the moment.
Yeah, there's a front to back book element that comes with bank balance sheets, where just through the changes in interest rates and the changes in the bill rates and so forth means that the rate being offered to customers in the current day versus the rate that was offered previously is different. So that sort of does play out as well in the margin.
On the property market, how bad do you see it getting in Australia in the next year, these declines? And is it up to banks to stem that to some degree to continue lending? Because a lot's been blamed on the credit squeeze. frankly, banks aren't lending enough money or to enough people?
Yeah, I think we first have to put it into perspective. There has been a correction in some parts of the property market, and you know, a lot of people are more referring to Sydney and Melbourne markets, but putting that in context to what we've seen around property prices appreciating over a number of years now, that correction is small if you compare it to what we've seen over the last few years in appreciation. So putting it in that context, there actually absolutely has been a correction. I share the concerns that I've heard the Reserve Bank Governor speak about, that you know, a credit crunch is inevitable if we're actually not lending. So I think there has been some concerns from both borrowers and from lenders in relation to how hard it is to actually get credit. Pleasingly, the Royal Commission and Commissioner Hayne didn't enter into that discussion around things like responsible lending, recognising that we have to be careful about whatever we do to ensure that credit is available and accessible for the everyday Australian.
Yeah, briefly to turn to interest rates and the Reserve Bank. If the Reserve Bank did cut rates this year, would you cut your variable interest rate?
Well, that's asking us a question before we see the context and why that's sort of come about. We'd have to wait and see.
And on that, your HomeSafe business, how much has that hurt from declines in property prices?
It hasn't had. It has had an impact, but not a significant impact, given that book is the loans, the properties within that portfolio are in specific postcodes in Sydney and Melbourne, and they're actually hand-picked to ensure that we're comfortable with the areas within those two cities.
Okay, and finally, your agri-bank business, how's that been going with the drought? Is there any kind of recovery on foot there?
Yeah, look, it's tough for the farming community up in top of New South Wales and bottom of Queensland to have a drought, and then, as we've seen over the last few days, the floods that they're now getting there. From a drought perspective, our own individual book, we've had minimal impact. So customers in our book have had minimal impact to the drought. We're still yet to see what's going to play out from the floods that we've seen, like I said, and are still playing out up north. At this point in time, we have very few borrowers that appear to be impacted, but of course it's early days, and we'll be staying close with our borrowers to understand what pressures they're under.
All right, Marnie Baker, thank you so much for joining us.
Thanks, Leo.
Now to retail, JB Hi-Fi shares rise on strong half-yearly results. My interview with JB Hi-Fi CEO Richard Murray coming up next.
This is Ticky on Your Money, covering the big business stories.
Welcome back. Well, a bright spot in retail. JB Hi-Fi reaffirming its full-year sales guidance as it posted a boost in its first-half net profit and lifted its interim dividend. Net profit rose 5.5% to $160 million, with total sales up more than 4% to $3.4 billion. But management is flagging increased volatility and says consumers are most inclined to open their wallets when a sale is on. Surprise, surprise. Total sales for JB Hi-Fi Australia, its main unit, grew by 3% in January, a slowdown from the 7.5% growth in the prior January. Same-store sales were also slower, 1.5 this January compared to 4.8 last year. Shareholders will see an interim dividend of 91 cents a share.
As far as I'm concerned, JB Hi-Fi is probably the best retailer we have in Australia, and they're amongst probably the top class in that particular sector they represent, better than some of their peers in the UK and in the US. Having said so, it's that age-old question: are you willing to buy a beautiful mansion in a bad street? in terms of property. And the share market is the same. Are you going to buy the best retailer in a sector that, in general terms, is facing serious headwinds? For me, the question is no. And so, irrespective of all those shorts that have to be covered, and they might surprise, and the share price might go up in the short term, I think longer term, this share price has nowhere to go but sideways at best.
And for more on those results, I spoke with CEO Richard Murray of JB Hi-Fi in Melbourne. Richard Murray, well, a very good half-year result. Market seemed to like it. What's your message for the short sellers?
Look, I've got enough complexity in my own life, and I'll just focus on what we've got to focus on at JB, and they can look after themselves. Right.
Okay. Well, yes, but the result itself, you must have been pretty happy with it.
Yeah, we've worked hard across both the JB brand and the Good Guys brand to create a lot of value for our customers. Work with our suppliers to, create some great promotions, and keep our costs in check, which is important in a low-margin business like ours, and so we're really pleased with the results.
Okay, I guess one of the questions for investors, which we've been talking about on the channel, is it's a great little company, or not so little actually, in a sector which is a shocker at the moment. What can you say about the economic outlook and how that's going to impact going forward?
I think we do have a habit in Australia of talking ourselves down. There's no doubt we've seen some tough property prices, and the share market had a tough finish to last calendar year, but it's had a pretty good start. I think, the unemployment or employment's high, the budget's in good shape. I think we're heading for an early surplus. So I think there's lots of things going for us. From JB's perspective, as I said earlier, we want to keep our costs in check, create value for our customers, and hopefully we'll get more than our fair share of sales.
What's your strategy going forward on the sales front? I mean, will there be a lot more discounting? I mean, are the discountings real? I think a lot of people ask.
We've always said that Australia's a very promotional market, especially in our space, and we work with suppliers to make sure, from our perspective, we create great value for our customers, but the suppliers help us fund that discount. So when we talk about creating a promotional plan, the key thing for us is to work with our suppliers to fund that and bring that to life for customers.
Are there certain products that you're going to weight within JB Hi-Fi at the moment? Certain products doing much better and will continue to do much better than others?
The reality with consumer electronics is there's always something that customers are more excited about. We've been through periods where it's been more phones than TVs, and other times where it's been TVs versus computers. The reality is replacement cycles are getting shorter, so there's always something at JB a customer wants. I guess, as we talked about earlier, our cautious consumer customers may take a little bit longer, but if we can entice them with a good promotional plan, and really the great technology that our suppliers bring to market, JB is great at bringing that to life in store. So customers understand it, we can help them get the right product and lower the risk, because research tells us in our space that customers get very nervous about the risk of making the wrong choice. Yeah. And what we constantly get feedback about the teams at JB and the Good Guys is helping them make the right decision. And I still that might be a thing about bricks and mortar retail, but I still think that's a fundamental plank of our model.
Your online sales were up 21%. Do you see that as a big part of growth in the business now?
The online sales in and of itself is exciting because we've done a lot of hard work to make sure both in-store and online we're relevant for our customers. The real thing we're trying to achieve is to make it a harmonious experience, a seamless experience. I guess people call it frictionless, be it online or in-store. So we know that while only 5 or 6% of our sales are online, 80% of customers are starting that journey online around research. And so as much as anything, the reason we want to have a great website is, yes, at times customers buy online, yes, at times customers click and collect and pick it up in store, but we know a majority of our customers are starting their purchase consideration online. And I'm sure, like you, if I've been trying to research a product and I can't get decent information online, I don't tend to complete the purchase. So with our suppliers, you'll see a lot more of our pages have videos and content from suppliers. We're trying to make that website you know, really the silent salesperson, and then you come in store and you might have a few questions. There's no doubt customers are coming into store better and better informed than before, and so, you know, the journeys tend to be a bit shorter than they were maybe a decade ago.
Yes.
And that means that, you know, we can move through customers more quickly but keep the business efficient.
And is that online story as true for the Good Guys as it is for JB Hi-Fi? Because I mean, there was some suggestion, I think, that some of the online stuff has been a bit challenging, including eBay.
Well, I mean, eBay is trying to achieve, even though the Good Guys have a store on eBay, but there's sort of the core Good Guys site, and then there's the Good Guys store on eBay. Yeah, eBay's, you know, they'll talk about their own sales, but from, you know, the perspective of the Good Guys core site, very similar to JB. You know, customers engaging, it's all about content, and we want to make sure that customers, we're constantly trialling both at the Good Guys and JB to make sure the experience for our customers is rich.
Right. So are you going to head to more higher margin products, do you think, though, Richard, or are you going to stay with roughly the current mix?
One thing we've always talked about at JB is let the customers decide. So we've got some products that are low margin,
yes, and
we do that well, and some of our products are higher margin, and we work there. The reality is customers decide, so you can't go against the tide. In fact, we lean into it. So sometimes we're selling a lot of low margin product, and that means we've got great sales numbers, a little bit harder on the margin front, but the gross profit dollars, which means we're staying relevant and creating great value for our customers, those gross profit dollars help us pay the bills and hopefully eke out a good return for our shareholders.
Yeah, and you've got a good cost story now, you know, in this half. Can you continue that cost story going forward, or are you going to have to invest a little more to push your growth up again?
So obviously a big part of our cost base is store wages, and so, you know, I'm very aware of the fact that, you know, if we are careful with our wages, that, you know, that can have an impact on some of our casuals within our team, so it's not a decision I take lightly. But that said, the reality for our business is we need to make sure our wages stay in check with sales. So if sales are a little bit less, we adjust wages down. But then, likewise, when sales are strong, we lean into that. So we've always said we'll keep our cost base in check with sales.
So what keeps you awake at night, if I can ask that corny old question?
Oh, I mean, the one thing I'm assured about is we've got one of the best teams in the business applying themselves against all the problems I worry about. You know, I worry about the culture at JB. I worry that we as an executive team don't lose sight of what makes our stores tick, thinking about our customers. We must keep our customers at the heart of every decision, and that will mean I have less things to worry about at night. The challenge for you know, all of us is we just need to make sure Australia stays a productive country, and sometimes we don't let bureaucracy and that get in the way of ensuring business can keep its prices low, deliver great value to consumers, and that's great for the economy. Yeah.
Is there anything specific, looking at this election campaign, that you think will impact on the spending power and consumer confidence?
I guess we'd just like to see good long-term investment decisions that grow the economy, that maybe aren't just sugar hits. Because while sometimes we've had sugar hits in the past and they're good for sales in the short term, they're a bit of hard work cycling. So I just like good economic policy that keeps the economy in, you know, on an even footing, and I think the economy is in pretty good shape. So yep. I don't think we need too many changes, and business loves certainty. So the more certainty there is, the better outcome, keeps consumers happy, keeps their confidence high, which obviously, you know, with property prices lately, that's maybe been a little bit of a challenge around the edges. But we just want, you know, good government policy, good consistent government policy that grows the economy.
OK, so finally, your dividends up, I see. You've got the New Zealand business back in the black. Your full-year results, you're pretty confident about.
Look, you know, the only cautionary note is we've touched on, and we've touched on it through this interview, that, you know, around the volatility that we are seeing. So certainly customers are certainly very value oriented at the moment, very focused on promotions. So we'll make sure we continue to deliver great promotions and great value, and I feel that if we do that, work hard, we'll see out the half.
All right, Richard Murray. Well, thank you very much. I look forward to talking to you in the full year.
Thanks very much.
After the break, we'll get some analysis on today's big moves from AACo and JB Hi-Fi. Steve Johnson from Forager Funds will join me next.
to Ticky.
Well, as we talked about earlier in the programme, livestock operator, Australian agricultural company AACo, is stuck between drought and flood. The listed farm services provider says it's bracing for extreme losses at its 30,000 head Gulf property at Wandoola station while counting the cost of continued dry weather elsewhere. For more on this, Steve Johnson from Forager Funds joins me live at the desk. Steve, you're one of these people who does actually follow AACo, because not a lot of brokers do, and investors, you know, funds managers do they?
I follow it more out of interest's sake probably than anything else, Ticky. I grew up on a farm, and seeing a listed agricultural business on the stock exchange dealing with all of the same problems that we dealt with as a family for a very long time, it's...
well, who'd be a farmer?
Who would be a farmer? And I've actually been really interested in their strategy over the past decade or so, trying to shift...
Just share the strategy. What is the strategy that Hugh Killen has been trying to steer the company towards?
Well, I think the best example is to think about New Zealand and dairy and how they've taken that and turned it into a premium product. And you can walk into a lot of Chinese supermarkets now and see premium Kiwi dairy. This is an attempt to take Australian beef and turn it into a brand as well, and say, instead of us just selling a commodity product here where we take whatever price we get at the sale yards, we're going to try and build our own brands, sell those brands overseas and keep that extra margin that you get.
And they're doing it with the herd themselves. I mean, the composites, what they call these composites. Oh, look at that terrible situation they've got over there. We're just seeing the vision now. But if you see these cattle, and they're called composites, and they're crossed, call it F1s with Wagyu, and they do deliver a very good animal, don't they?
Yeah, they do. And look, there's no more horrible feeling than that. You know, I remember sitting at home. Our place was actually on the river flats, and watching the water come over and just sit on top of your livelihood, and then it takes a long time to go away, and the smell sits there for a very long time. It's not just the financial damage, but the emotional damage of something like this is very, very heavy. Look, I think the product that they've built at AACo is good, but building a brand is not. You know, you don't just say one day we're going to change our strategy and the next thing you know you've got a profitable business. It's really, really hard work.
Putting all this drama aside, you still think the business is challenged?
Yes, I'm still sceptical. There's just a huge amount of assets tied up here for the amount of return that you can ever conceivably get out of it. And you've got a very significant corporate overhead cost in AACo's coast as well, which I think is too high. A very significant
corporate investor in there too.
Yeah.
In Joe, what's his name? What is his name? The private equity guy from Britain, anyway. And he's got a huge slug.
And I think your upside here is there are lots of people going around the world trying to buy these strategic agricultural assets, and they're paying crazy prices for them. So I think the chances that something strategic happens with this business are quite high. The chances of you actually getting enough cash flow out of it to justify your investment are quite low. They've
also got, I said it, that AACo has land which represents sort of 1% of Australia. Now, that's a lot of land. It's also got interesting opportunities both around water. We've now got calls again to bring the water down to the south, and also I guess energy. You know, there's a lot underneath the land as well, so there are opportunities, aren't there?
Yeah, there are. That's, I mean, right back to Sydney Kidman's time, that's very marginal land up there, so you can have a lot of land that doesn't have much livestock on it. I think all of this water coming through for years down the track is going to provide good feed up there. But it's just you know, the story, the narrative is always great around this stuff. It's just really, Macquarie has seen this as well. They've run an agricultural business there for years now. It is really, really hard to make money out of farming, and you're competing against, yes, mum and dad operators, but they are very, very efficient, and most of them don't work for a salary. So you're trying to take this corporate cost and put it in and go and compete with people that have been running the land for years.
Having said that, those individuals who are up there now, they really, you know, they don't have anything. Some of those individuals, they may only have a smaller number of cattle, and they may have only lose maybe half of them or whatever, or sorry, even 10% of them, but that's enough to tip them over, presumably, given their funding structures. Yeah.
It's horribly sad. My experience has been they are very, very resilient people and extremely hard workers, and they will find a way to work through this. And, you know, they'll continue doing what they've done for many generations in some cases.
Well, our thoughts go out to them. I mean, in better news, JB Hi-Fi. That seems to be defying the trend in retail at the moment. What do you make of it?
Yeah, I think relative to JB Hi-Fi's historical results, this is still one that reflects a difficult economic environment, but also shows the business's strengths. This is one of the best retailers in the world on a whole lot of metrics, like sales per square metre and
in the world.
It's I'm serious, in the world. It is one of the best that you will find and come across. Their cost of doing business is extremely low, and that lets them sell the products cheaply. So I think you're seeing here the results of a very competitive, lean business do well in what is a very difficult environment. It's a polarising stock. I mean, we don't own it.
Yes.
I think a lot of people are rightly worried about the downturn in housing and consumer
So they're worried
sentiment.
about the sector, not
There's
the
a macro
company itself.
view that this business is facing some difficult times ahead, but they do just keep delivering the results. And one thing I am very sure of is that we go through a crisis, it will be the last one standing in its space. It just
So if you're a
market
balanced
share.
fund, you have to invest in retail, you'd be there.
I think so. And look, I think for people that, if your view is that all of this pessimism about the Australian economy is overdone, this country has a very long record of doing very well. And if you're willing to back that, I think there are businesses like JB Hi-Fi out there, big dividend yield, low earnings multiple that's been very successful for a long time. We're actually looking at quite a few of them because I think in terms of the market at the moment, there's just so much pessimism out there about some of these businesses that it's an interesting opportunity. It's not one we're probably a little pessimistic about the economy ourselves, so we haven't taken that leap yet, but I do think it is a very high quality business.
Steve Johnson, thank you very much for those two analyses.
Thanks,
Good to
Ticky.
talk. Well, that's all for the show tonight. Tomorrow night, Mortgage Choice CEO Susan Mitchell on the future of the mortgage broking business. Until then, thanks for your company.